The SEC didn't stop market crashes. The SEC didn't stop people from losing money. In fact, I'm sure a lot more people have lost a lot more money because of the SEC.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
There are these legal cases that have been going through the courts, and I want to make people aware of them. I actually know several of the people that are involved here. One in particular, this guy, Justin Keener, who's recently lost this case, was sued by the SEC. And the SEC is now, with the help of the lower courts, dramatically expanding its role. The SEC was started about 90 years ago. It was an overreaction to the Great Depression. We would be much better off today if we didn't have an SEC. But we do, thanks to what the government did, right? Because the government never lets a crisis go to waste. So the stock market crashes, and so the government uses that crash to get more power over the markets. And so the original intent of the SEC, and in fact, the law today, it's still there to protect the public, to protect the small investor from Wall Street, right? Because small investors got hurt during the crash. And so the government said, oh, okay, so we need government to protect people so they don't get hurt. Of course, the best protection for the public is a free market. It's not because we didn't have enough regulation that people lost money during the 1929 crash. We've had many crashes since then with the SEC, and people have lost a lot of money. So the SEC didn't stop market crashes. The SEC didn't stop people from losing money. In fact, I'm sure a lot more people have lost a lot more money because of the SEC. And so we shouldn't have it. But what's going on now is Justin Keener and some other people, he was funding small cap companies that trade over the counter on the pink sheets. He was providing them with capital that they had no other way to get. They were very risky companies. They couldn't tap into traditional financing to get money. So they went for guys like Keener and a lot of other guys who would loan them money at a reasonable term, maybe 8-10%. But there was, the rates were actually a little higher, but they were the best rates these companies can get. But it was generally done in the form of a convertible note where the lender, at his discretion, could convert the note into stock and then sell the stock into the market. Now, if that happened, the company wouldn't have to repay the money, because once you converted from debt to equity, you now had stock in the company, and you could just sell the stock into the market, assuming there was a market to buy the stock, and you can make money. And some of these guys were making a lot of money net. I mean, they didn't bat 1,000. They lost a lot of money on some of these deals, but they were able to make up for it with the deals that were profitable. But anyway, the SEC came after him and some other people, and they said, you're buying and selling stocks for a living. You need to be registered, or you should have been registered as a broker dealer, but you weren't a broker dealer, and so we're suing you for buying and selling stocks and not being a broker dealer. But they were buying and selling stocks for their own account. They had no customers. Broker dealers are supposed to deal with customers, not for themselves. And so he makes this point, and he actually lost. The SEC won a summary judgment in the lower court. And the court actually ruled that Keener met the definition of a dealer, quote, because he operated a regular business of buying and selling securities for his own account. But that's not the definition. If you go to the SEC's website today, they exempt people trading for their own account. It's meant to protect customers. So if you are buying and selling stocks on behalf of other people and you're charging those other people a commission, then you need to be registered as a dealer. If you're just making investments for yourself, doesn't matter if that's your source of living. If you do that and you don't have another job, if that's the only thing you do, is buy and sell securities for yourself, you're not a dealer. But now, according to the lower court, you are a dealer. Now, the SEC wants Keener to disgorge all the profits he made doing this, plus interest, plus penalties. It's more than a $10 million judgment. You know, initially, they wanted to ignore the losers and cherry pick the winners. They were able to at least get them to give credit for the money he lost, right? So he didn't just pay taxes. They don't just want back the gains. It's the net. But still, you pay income taxes on the gains. You don't get the income tax back. So the government actually ends up making a lot more than the individual investor, because he has to pay back all of his profits, but he's already paid taxes on the profits to the IRS. You can't get those back. You can't write off the fine. Then the SEC wants prejudgment interest. They want over $1 million in penalties. And you have a lot of other people in the security industry that are interested in this case that have filed, amicus briefs on behalf of Keener or others, because what the government is doing here is they're trying to get the camel's nose under the tent. Right now, they're focusing on a narrow subset of traders. These are people who were trading in convertible debt. But if they can say that these traders are dealers and need to register, then everybody, not just a mutual fund, an insurance company, a hedge fund, a pension fund, but everybody who just trades stock on a Robinhood app, if that's your primary source of income, maybe you're retired or all you are is a day trader and you're just trading for yourself, according to this, you now need to be registered as a broker-dealer. This is how the government usurps power. It's up to the courts to rein in government when they're going beyond their statutory or constitutional authority. And that is clearly what the SEC is doing by going after these guys. But, there's other examples of this. There's a case in court that is before the Supreme Court now that everybody should be looking at. And I talked a lot about this in the past as well, about direct versus indirect taxes and how the 16th Amendment doesn't give the government unlimited taxing power to tax whatever it wants directly without apportionment. It can only tax income without apportionment, and it can't redefine income. In fact, it can't define income at all. Income, it has a legal definition. That's why the Internal Revenue Code doesn't even define income. It defines gross income in Section 61, but it never defines income. And so you can't define a word using the word, right? Like you can't define a big dog by saying it's a dog, only bigger. Well, what's a dog? I don't know. I don't know what a big dog is until I know what a dog is. Well, you can't define gross income without defining income. Well, where is income defined if it's not defined in the Internal Revenue Code? It's defined by the Supreme Court, because the government can't define income, because then it could change the Constitution. It could amend the definition. It can amend the Constitution by changing the definition of income. So the courts have to define income, and the courts have. And what is not income is unrealized gains. A wealth tax is not income. If you want to tax wealth, well, that's a direct tax. You have to amend the Constitution. It's unconstitutional to call it income. Now, what's going on and why this case has significance for a wealth tax or any attempt by the U.S. government to tax unrealized appreciation and call it income is this case is going after a provision of the Trump, Jobs Act or Tax Cut and Jobs Act. I forget the title, but they had a deemed repatriation tax that helped fund it. And it gave the government, I don't know, hundreds of millions or billions. I'm not sure how much the government collected. I paid that tax myself. I had some, not income, but I had offshore investments in my bank. Actually, it was because I owned my bank, which I no longer even own. And I never got a nickel of dividends. And I ultimately lost all my money. I ended up having to pay a tax on some accumulated earnings that the bank had that were never paid out to me, that were held as capital by the bank. But this case, correctly, and I read the brief, it makes the argument that this is not income, that this tax was unconstitutional, because by no definition can these undistributed gains from the prior 5 years be deemed income in any given taxable year. And so the case is asking the court to declare this tax unconstitutional. But if the court does it, they will be reaffirming going forward and sending a clear message to Congress and the White House that any attempt to tax unrealized gains or wealth is unconstitutional unless it's apportioned, which it never will be done. And I don't want to get into apportionment again on this podcast. I don't have that much time. I've talked about that on other podcasts and why it's so important. Remember, the U.S. government doesn't have unlimited taxing power. The taxing power is limited by the Constitution, specifically when it comes to direct taxes. The framers of the Constitution did not want the U.S. government to even levy direct taxes unless it was an emergency, like a war. That's why they made it so difficult. That's why they subjected it to the rule of apportionment. They believed that most government revenue during peacetime would come from excise taxes, which don't have to be apportioned. They just have to be uniform throughout the 50 states. I mean, 50 now, 13 back then. But it was very difficult to levy a direct tax. The income tax was declared unconstitutional. We got the 16th Amendment to allow the government to tax income without apportionment, but nothing else. All other forms of direct taxation, if they're not on income, are still subject to the constitutional rule of apportionment. And again, the meaning of income must be set by the courts, and it has been set. The government cannot change it. Now, we'll see what happens because, look, the courts ruled that the student debt relief was unconstitutional, yet that hasn't stopped the Biden administration from now tweaking the laws on student debt forgiveness. They've now changed it on their own again. And so you only have to pay, if it's an income-based repayment plan, you only have to pay 5% of your income in repayments. And now after 10 years, if your total debt is $12,000 or less, the entire thing gets forgiven. So what that means is if you borrow $37,000 and you earn $50,000 a year on average over 10 years, after 10 years, you're fully repaid on your loan after only paying back 67.5% of the principal and no interest. So what that means is nobody is going to pay $37,000 if they can borrow $37,000 and just pay back $25,000 with no interest over 10 years. So the government encourages people who might otherwise have paid for college to borrow the money instead because they're not going to have to pay it back. But what's even more significant is when you have these income qualifications, no more than 5% of your income, you're kind of indifferent between borrowing $37,000 or borrowing $100,000 or $200,000, because regardless, your payments, your monthly payments are the same. The colleges know this. They take advantage of this by jacking up tuitions even farther. Tuition has skyrocketed since Obama came in and took over the student loans, which is exactly what I predicted. You know, every time the government makes it easier for people not to repay their student loans, to pay back less than they owe, the result of that is that student loan debt grows even faster. College tuitions rise even higher. That's why we have better than $1.81 trillion of student debt. It's because of what the government is doing. And based on what the Biden administration just did, right, this is a green light for more debt, higher tuition. And so we're going to hit $3 trillion in college debt a lot sooner as a result of what the Biden administration is doing. Hopefully, we'll get a way to get this thrown out too, but it's very difficult to get stuff up to the Supreme Court, which is why I think it's so important that we get a ruling on this direct tax case. You know, the government might try to argue that, well, you know, we can't have the government rule on a tax that hasn't even been imposed. That's true, but this particular unconstitutional tax on deemed repatriation as income, that's there. That's a new tax. It's never been done before. So the Supreme Court could strike it down without completely unraveling the income tax, which really should be done because pretty much every aspect of the income tax is unconstitutional. But the court is not being asked to make that sweeping of a ruling. It's just on this one extreme example of an unconstitutional tax. But if the court rules this way, it will effectively create a barrier to future taxes of a estate tax, which is much better than waiting for the government to actually impose an unconstitutional, unapportioned direct tax on wealth, and then wait for somebody else to challenge it and make it all the way up to the Supreme Court, because that could take years to happen. And in the meantime, the damage would be substantial, having people pay this tax and then having the government refund the money years later. It's much better for the Supreme Court to get out in front of it, and hopefully the government will listen to the court.